Okay, guys, welcome. So for this week's educational video clip, I want to talk about the inside day pattern, as this is a pattern that is playing out right now on the ES and NASDAQ markets. So let's talk about it, how you can use it, and why it is useful. Okay, so I'm here on TradingView, and we're just going to frame, we're going to go over a little diagram just to explain how it works, and then how we're going to apply it for both continuation, breakout behavior, and also as a reversal pattern. Okay, so again, it's a popular price action formation that people look for in technical analysis. It's most commonly used on the daily time frame, but you can use it on other time frames, but I think the daily is definitely the best and what's used as the most standard. Okay, and basically it's very simple to identify. To have an inside day pattern, all we need to have is assume each one of these candlesticks is one daily candlestick. So we're just looking for, let me change the color of this. We're looking for a daily candle that is going to sit nestled inside the range of the previous day candle, okay? And with this, we are including the wicks of the candle. It doesn't have to be just inside the body. It can also, overlap a little like we do here. The main thing is that it is inside of the high and the low of the previous day candle. In itself, this creates basically like a pause. The inside day pattern basically indicates that the market is pausing or resting. And so especially you'll see this when we have strong trends, you'll sometimes get inside day patterns as the market rebalances before we make the continuation of the move, etc. Okay? So the way that we're going to play this, I'm going to go over both scenarios as a continuation and as a reversal pattern. So when we identify the inside day, what we look for now is the candle that is going to form on the third day. Okay, and for that, I'm going to draw now the two possible scenarios. So basically, in a nutshell, this is the two scenarios that we will be looking for. So in this first example right over here, this is an example of a possible reversal scenario signal where on the third day, or sometimes you might even have multiple inside days stacked one against the other. But basically, on the next day, you're going to have market pushing up above or below the extreme of the inside day and closing back inside. So as you can see, we opened here, went to the high right here, and ended up closing right here for the day. So when we see this scenario, immediately our eyes are drawn to the other end of the range of the outer candle. Basically, what this indicates is we took liquidity, we had a false breakout, and now we're looking at potentially trapped aggressive buyers at the top here, trying to chase the trend, and we're now looking for a move to the bottom side of the inside day pattern that we're following. The next scenario is the continuation scenario, and that's simply that on the next day or the third day candle, we have a confirmed candle close through the high or low of the inside day pattern, and then this is a sign that we're going to keep the bullish momentum and trend pushing to the upside. Now again, like any other pattern, this is not a 100% win rate thing that you just need to blindly trade. Obviously, since we're looking at a daily time frame, if we're day trading, we're going to go into our lower time frames like our 1 hour chart, 15 minutes, 5 minutes, etc. and then we're going to do a multi-time frame analysis, and we're going to look for signs of weakness or strength when we get to that edge, and then look to play out the scenario. Or obviously you can wait until this candle actually closes, and then this is going to give you the confirmation then for the next day on day number 4. Now here you're going to start looking for any kind of bearish scenarios in order to get a follow through move to the downside, or here you're looking for these areas to keep holding for the continuation to the upside. Okay, and as I mentioned, right now on NASDAQ and ES we have this playing out. This is the ES market, and you can see right here we have the inside day that we formed last Thursday. Then this was Friday's candle, which you can see was more of a pause and pretty much inside of the entire range of last Thursday's. And then look at the candle we made on Monday. We came down, wick through the low of the Thursday candle, and we closed even above Friday's candle. So now this is telling us that going into Tuesday, we are looking for a follow through momentum to go and take out the other side of this daily candle. If we go into an hourly chart, you can see how this played out here, where we had the low of Thursday. Friday again was a very small range, pretty much from here to here within Thursdays. And then here on Monday we had the breakdown in Asia, and then as soon as Europe markets opened, we came back, reclaimed this low, and now we're closed all the way up here. So now immediately our focus is on this equal highs that we left out here. And so now when we open on Tuesday, this had a very impulsive move, so we could definitely have some kind of retracement here. But overall, since we already took out the outside low liquidity here, now we're looking for a move to take out the top area of this. Here, as we see on NASDAQ, if we look at some examples here, for example, we had this inside day right here. And you can see on the third day, we had a confirmed breakout of the high. And then we also broke this swing highs here. And then we had a very nice continuation to the upside. Then similarly on this inside day, we actually had a double inside day here, where we had here on Thursday, and then we have Friday and Monday's candles inside of the range of Thursday. And then here on Tuesday, we had a very bearish close through the lows, and we actually had a perfect back test, and we had a continuation of this impulsive trend move to the downside. Here, for example, on Forex, on Euro US dollar, we have this inside day, and you can see we actually had 2 candles in a row that wicked but just failed to close below this, and then we ended up coming back to take out the other side of this range over here. Another example, like right here, this looks like 2 equal lows, but this low, let me see, low 70, 60, 28, in 60.22. So no, this actually took out the low, so this was not an inside day. It has to be, you know, inside of the previous candle. Even if it's just by one tick or 1 point that it exceeds it, then that invalidates the pattern. Now, obviously, like we mentioned, you know, there's not going to work all the time. Like you can see this one right here. Oh, no, not this one. Sorry. The one next to it. This one. We had an inside day here. We had the break. And then, no, in this case, actually, it did work. Yeah, and then we had the continuation with the back test of it. So this one actually played out as well. I was looking at another example when I was thinking of this one. But overall, you can see how this pattern, again, it's a very useful price action pattern to know and to track in your trades, and that can definitely help you in the moves coming up in the market. So again, this is the inside day we're looking at on ES right now, and this is the inside day we're looking on NASDAQ, which it's actually further down than what the ES is, but we gapped down and we're back inside. So now we're looking at the upper edge of this pattern right over here. Okay, so that's pretty much it. Hope this video has been insightful, and I will talk to you all again soon.